Honorable speakers, member from CFA fraternity and respected audience, Assalamu alaikum and a very warm welcome to the first event of our panel discussion series, the title Putting Investors First. As you all know that CFA Society Pakistan earlier signed a memorandum of understanding with the SECP for joint conduct of promotions of investor rights and investor protection with the support of CFA Institute US. In this regard, Statement of Investor Rights were translated into Urdu, and both Urdu and English versions have been publicized in leading newspapers during the year. The Statement of Investor Rights advise buyers of financial product the conduct they are expected to receive from the financial service providers. Investor protection promotes investor confidence and by reassuring investor that their rights are fully safeguarded. By if there is any malpractice in the market, they'll be fully covered. And if there is any issue with them, they have the significant recourse available in the market. After today's event, which is mainly focused on the intermediary and the relation with the regulator, would like to conduct the second event of this series, which will be targeted towards the high net worth individual and will be planned in Lahore. Be followed by the third event of the series, which will be focused on the retail investors. In addition to these advocacy activities, CFA Society of Pakistan been actively involved with various other initiatives which encompass excellence in various areas of banking, financial industry, developing the future generation through investment research challenge, and also recognizing the CFA charter holders, to name a few. Without further delay, I would first introduce the panelist who would be giving a brief introductory speech on the topic of investor interest, investor protection, and investor rights, which will be followed by a 30-minute discussion, moderator-led discussion on the various issues and challenges that we are facing as industry. Then we'll open up the floor for Q&A from the respected audience. I'll just introduce my panelists, starting with Ms. Khalda. Ms. Khalda Beeb is currently working as director with SECP. I'll just introduce my panelists, starting with Ms. Khalda. Ms. Khalda Beeb is currently working as director with SECP. She is heading the area of investor education, international relations. Our second guest today is Mr. Naseem Beg. Beg Saab needs no introduction in the financial market. He's been one of the pioneers of the local mutual fund industry. He was the founder, chief executive of Arif Habib Investment and is currently serving as vice chairman of MCB Arif Habib Savings and Investment. My third guest, Mr. Aliuddin Ansari, is a well-known figure in the corporate circle. He was the president and CEO for Angro Corporation and he's been the chairman for all the subsidiaries of Angro for the last 3 years before partnering with Bank Al-Falah to provide advisory services to the Al-Falah's brokerage arm. Earlier has worked with Bank of America and has also headed the CLSA operations in Pakistan before heading AKD Securities. Mr. Nadeen Naqvi is our fourth panelist today. Is currently working as the managing director for Pakistan Stock Exchange. Economic and corporate research have been the hallmark of Mr. Naqvi's career. He started his career with BCCI, and later on he's worked with some of the leading international financial institutions such as Morgan Stanley and Morgan Stanley and Merrill Lynch. Shahzad Chamdia Saab is the fifth with the panel. He's been very active, long-serving member of the Karachi Stock Exchange, now PSX, and has held various positions there. He's currently working as the chairman of PSX Divestment Committee.
At the Securities and Exchange Commission of Pakistan, we have a three-part mission. First is to protect investors, then to ensure that the markets are fair and efficient, and that to facilitate the formation of capital. All three parts of this mission basically revolve back to the first one, to protect the investors. Because if you don't have fair and efficient markets, then investors won't be attracted to this market and provide the capital that the companies they need, and they come to the stock market for the capital. So the focus of ours at SECP is investor protection. This is the primary focus of SECP. These retail investors are the primary focus of SECP, and to safeguard their interests, we are working And if we are not able to safeguard their interest, it means that we are not able to fulfill our mission. SECP is working through various channels to safeguard the interest of these investors. This is through investor education and also through our enforcement actions and also through formation of news laws and regulations. Because we consider that our markets not only have critically low level of access to the financial services and products, but also the awareness level is very weak in our markets. And this is the primary factor that led to previous various frauds and scams that evolved and that emerged in the markets, and investors became victim of these frauds. And had they been properly well aware about their rights and responsibility, they would be able to better address their concerns beforehand. So to address these areas, SECP has launched this investor education initiative with the collaboration of various market participants also. We are working on a comprehensive investor education program has been launched by SECP, whereby both through physical and virtual means we are raising level of awareness of investors on their rights and responsibilities, what investment avenues are available in the markets, and how they can safeguard themselves against the frauds and scams in the markets. But the challenge is, or the limitation of investor education is that we can't say that investor education will eliminate uh, any fraud and scams in the markets, and investors will be able to make all well-informed decisions. Because making an investment decision is a behavioral sort of aspect in it, and there are certain barriers that limit the change of behavior of investors and when they are making their investment decisions. But we are certain that through appropriate utilization of investor awareness channels, we will be able to reduce the information asymmetries that are prevailing in the markets. And over a period of time, investors will be more aware about their knowledge about the markets and the precautions they should be making before investing their funds in the markets. But this is a long-term commitment that we are undertaking, and we are committed to continue our efforts in this regard. Thank you.
एक साहब का रिश्ता आया तो वो लोगों ने पूछना पाछना शुरू किया कि कहाँ जाना है, क्या करना है। तो एक साहब के पास पहुंचे तो उन्होंने कहा बड़ा अच्छा लड़का है, बहुत होनहार लड़का है, तमीज़ वाला है, पढ़ा लिखा है, बस एक उसमें कमज़ोरी है कि मुंह से प्याज की बदबू बड़ी आती है। वो यूँ है कि वो शाम को कभी कभी अपने दोस्तों यारों के साथ ज़रा चढ़ा लेता है, तो इसलिए प्याज खानी पड़ जाती है। और वो कभी जब दोस्तों के साथ बैठा रहता है तो वो घोड़सवार के ऊपर पैसे भी लगा देता है। वो बहुत अच्छा लड़का है, कोई ख़राबी नहीं है उसमें, मगर जब वो घोड़ों के साथ पैसा लगाता है तो कभी कभी हार जाता है, तो गम गलत करने के लिए थोड़ी सी और पी लेता है, तो कभी रात को देर से आता है तो प्याज की बड़ी महक आती है। तो मैंने ये इसलिए कहा है कि वाई आर वी हैविंग दिस सेमिनार, why are we saying that investors need protection? Is it not in the nature of things that we as custodians protect our clients? Basic morality and ethics of behavior should be part and parcel of our profession. Why should there be a need for an external pressure or external education to us, the intermediaries, regarding professionalism? And the reason is that even 1% or less of people damage the entire reputation of the industry and confidence. And the only way we can prevent it is that we ourselves, when we are together with our own peer group, we make sure about the basic function of ourselves as intermediaries, which is the function of the Amin, which is the function of the custodian of somebody else's interest. And that is the simplest possible bottom line for all of this that is happening. as professionals, if we cannot be the ameen and custodian of the people who entrust us, then I think we are in the wrong profession. And that is all I have to say. Thank you.
I think we have been taught and we have been learning this academically, yes, and also as professionals, we know that it's our responsibility, as Nadeem said, to serve the investor right. But the problem still exists that besides the right which exists of the investor to have the information honestly, diligently, and professionally from the finance professionals, we do have incidents. I would categorize the awareness and right to information separately, because the issues which have come about in the past 2 decades, and we have seen, I was just speaking to one of the stock exchanges regulators, the frontline regulators, and they just told me that there's a recent case in Islamabad of one member. This is a post-integration. Although the quantum, the size of the fraud, if I may use that word, it is a fraud, it's not that large, and it was timely caught by the audit team of the PSX. But the nature of fraud is such, it is so basic that even in this day and age, we are unable, or we are living in such environment that we have to face these kinds of problems. And that particular member from Islamabad does not have any connections whatsoever with the PSX system, or even if he's maintaining those connections, he's not using it for trading purposes. Even the back office system is all made up. And the forged documents of CDC statements and so on and so forth, and CCPL and whatever. But the point I'm trying to make is that the investors at large, even the educated ones, they get into this trap. And this is mind-boggling. I mean, how can this happen in this day and age? So what is that we are required to do? Now, when we look at this area of putting investors first, one of the areas which is very simple is that the investor should be informed and has a right to complete and accurate record. An investor should be made aware of the completeness and the accuracy of records. And if some investor does not know about it, then how do we handle that? So I think we have to first, unfortunately, address the basics. And the basics could be addressed in such a way that we need to create awareness amongst the investors that if they want to invest in equity market, they need to know about the very basic things like CDC and the back office records and so on and so, just like they know about the bank accounts. I'm sure there would be, if anybody is investing in a bank, putting money in a bank, the chances of such kind of basic frauds are very less. But I think the investor in Pakistan is not aware of how his records are being maintained, how his or her right to information exists. So this is one thing which has to be addressed. I'll take a couple of minutes more. On the other side, which I said, the right to information. This is one area which I, for myself, is being observing for the last 2 decades and more, is that the information, how it is disseminated in Pakistan, is also not structured properly. I know for a fact that if you go into the West, even the thought process of the board and the management has to be disclosed to the investors. So if later on, if something materializes, it might have impact financially on the financial statements.
First of all, let me start by saying I think the market has come a long way in the last 24 years that I've been watching it. It was the Wild West when it opened up to foreign investors in 91, 92. Some of us were there. Then it was the Wild West in the 90s. It was a great time. I think everybody had, in the 2000s, and then obviously we've had a really bad spell over the last 8 years, despite the market having done very well. I mean, I think that's the other thing we have to look at, is that the market itself has done very well over the last 8 years, but you don't get the feel that we are as successful as the best stock market in Asia and so on. Now, putting investor first, I don't want to dwell too because I think the real benefit will be looking at the question and answers. Just picking up on the first part, the level playing field is one part of having a fair marketplace. We tend to focus very much on the most blatant form of abuse, which is fraud. People running off with securities or monies of clients. But actually, the biggest money is not lost that way. The biggest money is actually lost through market abuse. And so that's the other area. I think there needs to be a much greater understanding and debate that who's taken this money. We quantify this broker in Islamabad may have run off with 5 crores. Has someone run off with billions of dollars through market abuse? Have we ever thought about that? And where do we stand on that today? So I think in each of those areas, now let's come to liquidity. Whereas I think we have improved tremendously over the last 8 years of that low point that we hit in 2008 in trying to lock up, lack of fraud and whatever else. I think there's an abysmal lack of liquidity in the market. And that's a real cause for concern for the investor. I'm not talking for the intermediary, but putting investor first. This has, if you look at it, our market used to have too much turnover at one point. There was too much liquidity. The market cap would turn over 5 times in a year. But now you're at less than 1, at about half. That's terrible. You cannot execute without pricing impact. And so for the investor, there's a huge cost to trading, getting in and out of the market in size. And we need to focus on why that has happened. It's a major shortcoming of the market today. A point related to that, point number 3, in this, when you try and protect the first point, you can lock up the other 2. So all 3 are related. So in trying to create this fairer marketplace, the liquidity has disappeared from the market. It has also been due to lack of confidence after 2008, but enough time has passed for confidence to have come back. So it's not just a confidence issue. So the third area which you come to is really innovation and product choice. So when I look at the market today, and I'm looking at it after about 10 years, I see less choice in the market today, less innovation in the market today, less capacity in the market today than existed 10 years ago. And that's a real cause for concern. I may not agree with Naseem in terms of fixed commissions as the route to get to that, because it may not be the best for investors. But to me, there is a huge cause for concern that there is this lack of activity. There is this lack of choice and lack of liquidity. So I'll stop at that, and maybe we can take up some of these points.
Respected panelist, for sharing your thoughts on the investor protection and how we can move forward. We come to the more exciting area for today. That's going to be the discussion on the major concerns some of these speakers have raised, and then we'll open up the floor for the question answer session. First, I'll start with Ms. Khalda on the role of regulator side. As you also pointed out, that there is now need for investor education, investor protection. They don't know what are their rights. Do you think that in the past regulators haven't, up to the expectation, they have not done what was required of them? Because as Ali and Beksa pointed out, last 20-24 years, the market has come a long way. And now after, good 2-3 decades, we are now looking at investor education, creating awareness about their rights. Can you please share your views on that?
Investor education has recently been given much more importance, but there are other factors also, because SECP was, since the very beginning, since 2000 when it was established, it has 2 primary roles: regulation, development of regulatory framework, and enforcement of the laws. We were taking due care of these 2 areas. Laws are being evolved, keeping in view the latest developments in the markets, and enforcement actions are also being taken up. But the the area that has not been identified as the gap is the awareness on the part of investors, because only enforcement or the new regulatory framework wouldn't address the entire area, that investors need to know what their rights and responsibilities are. Uh, we understand that through investor education, this gap between the interest of market or the industry and the investor would be reduced. So we are more now focused towards the investor education, because this way this will be complementing our primary role of enforcement and regulatory framework development.
Follow-up question on that. While you are thinking on these lines, that after the earlier, the two areas that SEC was focusing on, now we're more focused on gradually bridging that gap, which is the need of today. Do you think that in order to improve the system, what sort of resistance from the other part, that Ali pointed out, that the three pillars, so they need to balance out as the regulator. So how do you think that, it's already you are facing those resistance coming in from the third pillar of the market, or what sort of resistance you at regulator level are experiencing or been experiencing?
There is always resistance to change, and as we are taking more stringent enforcement actions and new laws and regulations, which are obviously backed by the international standards, resistance is there. But I think considering that this is all in the benefit of the industry, gradually this is reducing.
Actually, I think there are two aspects. One is, of course, the legal framework, and then there is the practice and behavior of the sponsor shareholders. One of the things that we need to do is to increase the float of this market. If you take out the top 50 companies, the float just collapses. And SECP and the frontline regulators are working on it. And there are certain proposals that are going to come out, which, like India, we would mandate a 25% minimum float to stay invested. The other thing we are doing is to grandfather what the past is, because we cannot go back now and just make it 25. So one of the proposals is that there will be A board and a B board. So regardless of whether you are a multinational or any other big company, but you have less than 25%, you will be on B board. Now the idea is to just to give a sense to the investors that, look, these are less liquid companies, and therefore you are more open to potential pressure or potential lack of sort of equal treatment by the biggest shareholders. The rest are 25% free float or more, and therefore there's a lower chance. That's one part. The other part is the exchange's role in day-to-day functioning. We have tried to do that in the area of voluntary delisting. As you know, the celebrated case of Unilever, when they came to the market, they offered a price of 9,000, and the exchange's delisting committee actually put its foot down, and we negotiated a price of 15,000, which is a huge jump. And I think we have received several letters from minority shareholders, both domestic and international, that very few jurisdictions have come out so strongly and looked after the minority shareholders. So it's a dynamic situation. I think it will continue to evolve. We are beginning to see more takeovers by international interest of our listed companies. That is going to be a double-edged sword. While the majority shareholders are very happy that the prices have gone up because the international valuations are applied, those international investors are now going to get significant stakes into our companies, especially the medium-sized companies, and they're going to demand better disclosure, better treatment of the minority shareholders. So it's a natural market mechanism that will also work.
Thank you. Now, talking about all the, these positives that over a period of time we've been able to done as an industry, that boils down to one simple question. Now, looking at this rating Asia's best stock market, we've consistently performed very well. But if you look at the level of UI and the level of investors that are active in the market, that is a very minuscule number. And looking at the background of how the markets have performed in the past, that is not really related with that level. So we must agree, understand that something or most of the things have gone wrong on the other front, since the market have been performing very well, but we've not been able to increase the number of investors in the market. I'd like to hear your views. Start with Ali and Beg Saab and then. Sir.
The minority shareholders. A critical issue is that most of the listings have been for the wrong reasons.
Yeah.
Whether you take multinationals, the case like Unilever, they didn't come here looking for minority shareholding capital. They didn't need it.
Right.
All your foreign pharmaceutical companies, etc., they don't need you. They were forced to list. Then the tax laws were created to give an advantage, so a lot more of people came to list. So when I come to the market, and my reason for listing is not that I want public money, because if that was my reason and I know that I would have to go back to them, I'd look after them. But if my interest is elsewhere, that is the key cause, and I think we need to address that as well while we try and figure out everything else.
The market abuse happens because, once again, I will go to the basics. Because of the way the information travels here, and there's the secrecy and the knowledge of the information. So it is very difficult even for the regulators to identify that the activity which is taking place is actually based, or it's taking place for actually abusing the market, or it is genuinely taking place because somebody is having the information, the other person is not having the information. So the market abuse is the area which needs to be focused. And then you will be protecting all the investors, whether they're small, medium, or large. Yeah. So this small investors is a misconceived notion, to my view. All the investors, they need to be protected.
If I might add to that, I'll repeat: investor or speculator.
Yeah,
let's distinguish between those two. If you are an investor, you are less susceptible to get entrapped into not the other side of information flow, but simple pump and dump, and that too at a leveraged level. You're no longer an investor, you're a pure speculator. Yes, a lot of small savers get entrapped into the leveraged speculation, and we say, oh, the poor small investor. He's not a small investor, he's a small gambler, and takes a beating.
Right.
And there is abuse in the pump and dump, and therefore my aversion to leverage products, including all the nice things that we are hoping the new owners of PSX will bring in.
Do you want to? Yeah.
Anything left unsaid? But yes, I'll just pick up on a couple of points that you had asked about the lack of growth of the retail investor. Right? We tend to focus in on this number, particularly because in India we know they have millions, right? So, what is the right number? I don't know. Okay. The main function is obviously that they should be able to participate through their savings in the stock market. I mean, that's the best way.
Yeah.
Are people sophisticated enough to be able to understand, manage their own portfolios? So these questions are there. People are coming into the market, but they are coming through intermediaries, which are different, which are the mutual funds. It's not a bad thing, it's a good thing. I think I'm also very encouraged that over the last couple of years, you've seen actually very healthy investment by individuals. Not the numbers, but the total investment by individuals into the market has grown very substantially. Last year, if you look at the flows by individuals into the market and into mutual funds, which are predominantly individual based, I know there are institutions there also, particularly the equity funds, $300 million was sold by foreign investors, $300 million was picked up by mutual funds and individual investors. So you cannot say they are inactive and missing. They are there. Do we have in Pakistan the ability, are people educated enough that 2 million or 3 million people should be investing in the market? I have my doubts, because earlier we were just talking about how the investor doesn't know a CDC account from a national clearing, and who's the good broker and who's the bad broker and so on. So I think the trend is positive. I think the main reason you are not seeing them in the market but in the mutual fund in terms of numbers is because of lack of choice and lack of product. Where are the ETFs? Where are the derivative products? Where has the world gone to? And what have you got? Who's responsible for this? This is the real question. So if you build it, they will come. If you offer them the choice, they will come to the market. And who has suffered? All the people who are crying, the market, the intermediaries,
Everybody.
the lack of money. And just in defense of the speculator, okay, I'm also alpha investor, I'm an analyst, I'm a fund manager, I've been a corporate leader, so, but the speculator is the most undervalued person in the market today, is an essential player, is essential for liquidity. We should make sure that the speculator is in the market, because if we only have investors, we will have no liquidity. So the choice for the speculator and its products should be there in a product that prevents market abuse. Because the speculator is the biggest loser normally, because the market abuse hits the speculator. So the lack of having structured global products, contract for differences, options, futures, all of these is hurting the market. And I would go all out to provide these to the speculator.
Just, yeah.
To say something, Naseem Bhai is my mentor and my elder brother and my best friend. And he's been purposely, I know, putting this cynical view about derivatives and so-called things. I just want to say something, and I cannot agree more with Ali. You need liquidity in the market for the market to grow. Somebody has to take that risk. Somebody needs to have the guts to stand up in the other side of the trade. If everybody says we are risk-averse, long-term investors, there is no trade after that. Yeah. Of course, risk management systems have to be there. The surveillance, monitoring and compliance facilities have to be there. That is our responsibility and the Apex regulator's responsibility, working hard on getting certain softwares and other tools which will allow us greater insight into market things, and at the same time the confidentiality factor remain there. That will happen within the next 6 to 8 months. But at the same time, I think there's one big reason. Ali mentioned that what is the right number? Just as a benchmark, 2% of the Indian population is invested in the market. 2.3% of the Bangladeshi population is invested in the market. In the case of Pakistan, it's 0.2%. So I don't know whether 2 is right or not, but we are certainly below the average benchmark in the South Asian region. A key element is a lack of level playing field. You can walk into a National Savings Scheme Center with a suitcase full of cash up to 5 million rupees with a Phata Purana form and a copy of your CNIC, and you can deposit it. You cannot do that in the stock market. The KYC today, which the brokers are supposed to be following, is almost as tough now as the banks. Second part is real estate. Now, something has finally been done by the government in that area, and I'm very confident that given the finance minister's stance of not backing down, some limited amount of taxation will come through there, and that will have enormous positive impact on the equity market over the 5-year horizon. So things are moving in the right direction, but I think level playing field is one area. The other is, of course, something that is jointly our responsibility: investor awareness and education. And now for the last 24 months, SCCP has really taken a big initiative, and we are there. Last year, we touched base with about 20,000 people, and more than, out of that, 12,500 actually attended and participated. And very rightly, as Ali said, bulk of the growth came from the mutual funds. I have now today, as I speak, 3 different offers from major mutual funds who want us to do joint programs with them because they found the past year so successful. So I think the momentum is building, and derivative products need to be there. They need to be contained, risk managed, but we need to bring in the options. We need to bring the ETFs. We are working with the National Bank of Pakistan and NIT very seriously to design a government securities ETF so that the hold of the banks on that market can be loosened and average investor can participate. So these things are on their way.
If I can just add one thing. Providing liquidity sounds good. It doesn't always happen. Speculators will always be there. I don't have an issue with that. It's when you push a small saver into speculative, leveraged speculative trading, that is what I'm averse to. And that is what the critical issue is that the regulatory side has to be very clear on that. And that's what has been destructive in the past. And when people remember that so-and-so lost money, so-and-so lost money, it was not as investors, they were leveraged speculators. And that's what the danger is, and that's what I speak out against.
Nadeem Sahib, if you can just shed some light on you, and Shahzad, I want to hear your views on in terms of the product. Obviously, you guys been with the PSX and been involved with the various product that in the planning phase. Keeping in view the risk parameters that Beg Sahib highlighted and the need for growth, which Ali also pointed out. What is lacking? If we see the product you talk about, 10 years ago, there were more products available to the investor and not so today. If you guys can, shed some light on that. What are the products in the pipeline? What has caused that delay in the past that we've not seen new products coming in?
Just on a lighter note, how will we sort of curb speculation or stop speculation once the CPEC is there and the Chinese coming in? Because they have like 15% of the population into the stock market as compared to India and to other countries where there is 2 to 3%. So we have to. So, Naseem भाई आपको तो उसके लिए ज़रा प्रिपेयर रहना पड़ेगा.
I think what has happened is globally, after the 2008 financial crisis, the pendulum has swung towards extreme high degree of regulation, and not just in Pakistan, throughout. Whatever the reasons were, the collateral debt obligations, other bad derivatives, but the impact has been generalized. Now, when we started to move the product launch forward, we got stuck at two levels. Level one was the regulator itself. For example, in the cash settled futures, they demanded 12.5% cash margin upfront. Now that effectively negates the entire purpose of a cash settled futures, which is actually less risky than the deliverable futures. So we've been in discussions with them. Then you have the second level, market makers. The market maker regulations were again so tough that it did not provide the right incentives for big boys to become market makers. Third, in Pakistan, one element is missing. Deep-pocketed investors who can become market makers, which is banks, which is asset management companies, which is large players. They are not allowed. Now, these are very major macro-level structural issues that will need to be addressed. We are trying to one by one slowly go forward, but at some stage, I think realization will dawn that at structural level, macro level, things have to be done. So as far as product pipeline is concerned, options, single stock options will be discussed in our board day after tomorrow. The concept paper, once approved, goes into regulatory affairs department, then goes through the process. Securities lending and borrowing, which is a precursor for financial futures to work, that thing has already been done. It has been sent to the SCCP. SCCP has promised before end of September they will give a thing. So things are beginning to move. SCCP is focused on it. It realizes that if you're going to have international players coming in, our market should be more than just plain vanilla. But it is going to be a slow process.
Just to add to that, we have an audience here. They should be educated. Is that I was part of the SCCP committee, and I think it was 10 years or maybe more, where we designed all of this. The security lending and borrowing, the options, the derivatives, the cash settled futures, the index futures. So I am still amazed that 10 years later it's going to go in the next board meeting, right? So I think there are questions to be asked from the regulators, the frontline regulator and the apex regulator. What happened? 10 years later, what happened? Why are we still here?
I would say thank God. That's how I feel about it.
Well, that is the answer I was going to make. That is the reason that we have not been able to put those things in place, because there's a lot of fear after the 2008 crisis, and yeah, I understand that. But after the post 2008, there was this fear, and everybody liked the status quo and the cash market and so on and so forth. Of course, the mutual fund industry loved it because that was growing and it gave a lot of impetus to the market. There's a lot of contribution from the mutual fund side. But having said that, I agree completely with Ali and with the market dynamics all around the globe is that they need to have derivatives. Derivatives are part and parcel of market. Now the regulators have actually made a headway, and there have been these products have been approved. I guess it's just that we are looking for market makers, and they have to take off. I think Nadeem can complete this.
Yeah, I mean, that's it. I mean, it's the process. There are certain prerequisites regarding software development. SCCP insists that should be a standardized software. Globally, that's not the case. We are talking to them. And Ali's right. I mean, we have to look inward. Why is it after 10 years still going around in circles? In fact, one proposal that has come in is to just bring in an international consultant, give them some money, and let something start. But I don't think that's the answer. I think we need to sit across the board with the regulator, with the key market participants, and thresh it out. But it has to be done.
Just want to hear your views on, do you think that fund managers, were responsible for not being able to, take up the market reputation or the image to the next level? And the things like when we hear, in late 90s, early 2000s, when things like closed-end funds, people are not aware of, the NAVs and the stock, the market price, or plus some of the loads that they were not aware of while investing. Do you think that that's true? And how, we have moved since then? Things have improved in your view?
All the funds report their NAV net of the charges, etc., and over time, I think all investors have done well by investing in most of the equity funds. So to that extent, they've done all right. I have a quarrel with the fund industry in that, as I said about the brokerage industry, the fund industry is conflicted too. They have to look at their bottom line. The fund industry has a board that governs the funds, their fiduciary responsibility, as well as the bottom line of the asset management company. And at the end of the day, the board's allegiance is to the shareholder who appoints them. So there are conflicts there. My own view is that every fund manager tries to demonstrate to you the type of alpha they will create, and therefore they get into a bit of speculative investing. They measure their performance versus, say, the KSE 100 index every month. Even if you look at the Mutual Fund Association's website, and I'm talking of the equity funds, the performance history is just the last 365 days. The entire focus is very, very short term for equity investing. So there's a structural flaw in how all of us look at life. Historically, even the regulator wanted a certain allocation for the so-called small investor, so that there'd be, when an IPO came, there'd be a short supply and there'd be oversubscriptions. Next morning, the prices would open high and the small saver would make a killing by selling off the next morning. You're not bringing in investors. And certainly that was not money made out of investing in equity. It was just pure luck that you got an allocation. So all our minds have been towards trying to make a quick buck, whether it's the mutual fund industry, whether it's the brokerage community, and the so-called investors. And so I really feel all of us need to rethink this structure if we want to go forward.
Just a question, Ali, regarding, we're talking about the intermediaries and, how things have moved in the past and the market abuses and all. But just want to hear your experience in front of, you headed the CSLA operations in Pakistan, and looking at CSLA and also some of the other foreign houses who actually opened up their operations. The general feedback that we get is, the regulator is too stringent, there's too micromanagement, or not making enough money. Like looking at the background of the market performance, that, doesn't make that sense. A lot of foreign houses like Morgan Stanley, and, all of them have opened and then they closed down their operations. Can you, share your experience of what actually happened at that point in time, and where do you see why foreigners are not, foreign houses are not coming in the business when we see strong potential in the market?
Okay, most of the foreign houses shut down after the 98 nuclear explosion. And because we basically shut the market from a foreign exchange point of view. So for foreigners, they actually had to trade in a parallel market and sell at a 20% discount. And some intermediaries made huge amounts of money just recycling that. And they were really mad about that. So the investors were mad. They would get mad at the brokers who were executing on their behalf.
Right.
And so the mood against Pakistan really soured after that. Yes, and I was on the board of the KSC when it happened. It's a very interesting story. So when we did that, people left and they vowed never to come back. Now, fortunately, investors forget, their new fund managers and analysts always entering. And 5 years later, they came back to the market. They came back in actually pretty decent shape or form. But at that time, none of the brokerage houses came back. Terrorism, all of those things. We were never a very large part of the index anyway, 0.2%. So a new model emerged where they could execute from the market. I think they would have come if this 2008 floor had not come, because you shut the market, and this time you really shut the market.
Yeah.
And again, this time the foreigners haven't come back. Okay, whatever we may say, just look at your foreign portfolio investment and look at the other South Asian foreign portfolio investment. Right? So they just follow. Brokers will come if their clients are active and demanding a service. So eventually, yes, inshallah, if our economy does well and there are foreigners entering the market, their intermediaries will come.
May I just add, my opening statement was that brokerage houses do not make money. They cannot make money. So we need to address that.
But they never made money in the 90s also because the volumes were very low. But they were servicing the client, right? And the client was happy that they were here. And no, you eventually you make money. You will make money by, okay, let's be very blunt about it, right? I've raised the point, but let me put some numbers on it. Okay, so when our market cap was 20-30 billion, our annual turnover of the stock market was 100 or 150 billion dollars. Okay, and the commission rates were a hell of a lot higher than they are today. So you could make money on commission. Most money was actually made by front running and back burning. So although clients were making, the institutions were making money on intermediation, the temptation and the greed did not prevent people at that time from engaging in market abuse, including manipulation. The real issue right now for investor protection is lack of liquidity. I just want to put that on the table, that when your market cap is 50-60 billion and your annual turnover is 25 billion, that's an alarming red flag for any regulator. You have to get it to at least 1. You have to be between 1 and 2. So, there's some rule of thumb, and that rule of thumb is not being met, and we really need to address why not. And a lot of this is this resistance to innovation, what's happening globally, and what we need to do is just follow international best practice. I think that's the answer.
There was this in the older Securities and Exchange Commission 1969 rules. We had this minimum commission, if not fixed commission, which you don't agree, but there was a minimum commission rule law, and which is already prevalent in many other countries. I think SCCP is discussing this with the board as we speak, and if there is, to make those, even the small and the medium brokerages viable. So if they were making money in the 90s, and I'm sure, I know for a fact that they were making money in the 90s. So they can, if this minimum commission law is there. The other thing is that now that things are changing very, very fast. The online trading is just taken off. And I see in the next 5 years, this investor base probably, if not 10 times, and at least it's going to be 3 to 4-fold. And that's where the brokerages would start making money because of the online trading, which is the new generation. They're not trading like picking up the phones and giving orders. They are trading on cell phones and the computer screens. So, and I think the brokerages, they have the right also to have a larger client base, just like the mutual fund industry has. And that is the norm in every country where there's capital markets, which is quite common.
Okay, so my point on innovation, I launched the first online trading in Pakistan. That was 2002 or 1, something like that, okay? So it's innovation which eventually leads to market access and product and liquidity. And that's why it's important. And people were against it. They were completely against online trading. I remember getting the first gateway to the Karachi Stock Exchange was next to impossible. And they were, I mean, when you look at the arguments today, they seem a bit funny even. But I want to really push back on fixed commissions. I would love to do it. After 10 years, when I left the market in 2006, I decided I would not be in the market. I wanted to work a little bit on the development. And for SECP's request, I went on the KSE board. I was put on as the chairman of NCCPL during the crash. So you can imagine that was quite a learning experience. That's the hottest seat I've ever occupied. So there's been huge learning. I see one guilty party sitting there who dealt with the issue. So when we deal with commissions, the global trend, international best practice, you don't fix commission. You let the market decide the commission. And if you think commissions are low in Pakistan, you watch what the commission rates are in the rest of the world. They're going to go even lower. However, it's the quality of the intermediation that will define the revenue. Don't try and fix it. Improve the quality of the intermediation, and those ones who are providing the quality intermediation will eventually get the revenues through increase in volume. Okay, I'll just to tell you about mutual funds, which are doing very well now. Again, during the same period, 2001-2, I remember I had gone on the board of Al Mizan Investment Management. They had 1 billion rupees under management. Okay, and no amount of raising the fees on that 1 billion would have made them profitable. It was the ability and the vision to expand the consumer base. And I asked recently, it was more than 50, 60,000 pure retail people who are there, who have allowed them to have 50, 60 billion worth of primary equity funds. So what changed? I think here is a lesson for us. The mutual fund industry was very similar, poor quality intermediation. Lots of different players were there. Then the bank stepped in and everyone else stepped out. And that added a degree of trust, compliance, some product innovation, although not enough, that they've not had necessarily the support that they should. But some, like I know you pushed a lot on the pension product, which has been a very successful product for the mutual fund industry. So I think a whole new model will be required. I was just talking earlier that there are still 450 stockbrokers in Pakistan, of which 350 are still active despite the PSX. The regulator needs to do some very basic things. And I support the moves that the regulator is making in improving regulation. But they may be missing the easier steps and going for the more difficult steps by putting in more and more regulation, tightening up more and more on certain aspects of liquidity, like exposure and other aspects which need to be fair and balanced, and not tightening enough on minimal capital requirement. Normally, the entry ticket to be an intermediary is $1 million globally anywhere. Without that, you can't be a financial intermediary. Have we got that? If we haven't got that, why haven't we got that? That's how you will improve quality of intermediation. So I think from here onwards, to get to the same level as mutual fund, you will have to improve the quality of intermediation. It will be 2-3 tiers. There will be discount brokerage houses. I welcome them. And then there will be full service brokerage houses, and they will eventually win.
See, when we talk of the economics for a brokerage house, which means volumes, and if I'm not making enough money because of the low commission rate, the only other way is increasing the volume tremendously, and then I will get I'll be conflicted. I'll get my investor to churn, and he's no longer an investor. See, either we distinguish. The topic today is investor first, not speculator first, not trader first, investor first. And I'll stick to my basis. Investor, we are not dealing with. We are dealing with other people who want to come and trade, sure, I agree with a lot of what you say.
And coming back to the minimum commission thing, agreeing with what you said, but I would still like to make a point that the issue of unfair practices needs to be addressed. That's where this, it is not necessary that if you don't have that minimum commission law, you don't have unfair practices. So you need to understand whether you're having the minimum commission law or not. If there is something going on as unfair practice, that needs to be addressed. So, and which we are all aware that there is this big issue of small and medium brokerages not being viable because of this reason only. And this is why we have this law in many other developed countries. Even in the Asian countries, we do have this law.
So if I might add to that, the unfair trading practices, one is pure fraud and manipulative trading, etc. And the other is where you get, as a participant in the market, access to information before others and therefore are able to act before others. To my mind, the largest segment in Pakistan that has access to information earlier are the banks. And they invest, and we are very happy that it brings in liquidity and it's wonderful for the market. So here again, we've got to think about it. There are issues that really we don't talk about. The real issues are we find the fixes that suit us. We had the banks' ability to invest pushed up from 10% of the equity to 20 and then finally to 30 for certain Badla type investing. The point is, those are quick fixes. In the long run, those are the fixes that hurt us.
Okay. Given that some people have given up a late afternoon to be here, we can also share some inside secrets with them. So I learned a long time ago that the people with the real information in Pakistan are the accountants, not the banks. And they're another professional body. And somebody proved it to me once. They said, before the bosses know, we will know. So there was a whole, I don't know if it exists today or not, the whole accountant network would share the information and they would bring that to the market. And we would know actually before the CEOs even got their printed reports what the results were and so on. Now, all of this is improving. I do want to say all of this is improving, that kind of blatant abuse, guidance, so we have many things which are improving the marketplace. The main, when we look at all of this, is the transparency of the market, the regulation of the market is improving. The manipulation of the market has actually gone down really well. I mean, we should talk about that also. Yeah. That in prior years, every year, if not twice a year or once in 2 years, you would have a major crash. And I did a study on this, and top to bottom 30%. It was all driven by pulling liquidity from the market. The people who did it would know exactly what they were doing, the old Badla system, then CFAS, then Mark II, and whatever it was. And it was a blatant abuse of the market. And who died in that? It was the so-called speculator. And who made the money? It was the manipulator. So those kinds of abuses have gone down. I think it's very healthy. I am now really worried on the other side. I also want to, for the sake of transparency and full disclosure to the audience, after 10 years, I finally decided that, why is this thing which I've been very close to not doing so well? So when I was asked, I decided to put in a little bit of my money with a major financial institution, Bank al-Falah, and to do an experiment to see, can we build that brokerage house and bring about that transformation which happened to mutual funds 10, 15 years ago. So I personally do believe it's possible to make money. And especially if the level of volume in the market will be reasonable. I think the brokerage houses can be good quality intermediaries. And interestingly, there's a very good response from the market. The market is also looking now for quality intermediation. So I think both of those things will happen.
Thank you. Thank you, respected panelists, for candid feedback and discussion on the key issues. With your permission, I'll just open the floor for the Q&A. In the interest of time, I'll just take maximum of 3 questions because we're running out of time. So just 3 questions, please.
I would like to make a comment and then a question. I think we should give a lot of credit to both the Apex regulator, SCCP, and the frontline regulator after the subprime mortgage crisis in 2008 for protecting customers' money and but lot of we have seen that Shahzad and others have said about minimum commission. And I remember distinctly, we are one of the oldest brokerage house in Pakistan, having established some 6 years back in 1957. And several decades back, we had minimum commission. And today, what is happening, since there is no, and I think it's a suggestion to both the SCCP and to stock exchange, our CRO is here. I think he also deserves a lot of credit for implementing so many regulations, and that there should be minimum commission, because we have seen that brokerage houses are even publishing in the media about zero commission. Now, how can a brokerage house survive with the zero commission and they are making it public? So I think it should be done very seriously. I still remember a board of directors had approved minimum commission a couple of years back, and for institutions. And a memo in this regard had also gone to all the intermediaries by the MD of Stock Exchange, then it was taken back. My next comment is about the volatility of what we see. Now what we are hearing about the strategic sell of our shares and so many expression of interest that we have received. And among them, if you look at major economies and the volatility of stock market which has taken place all over the world in the past few years has been China. Like people say, every mom and dad has a share in Shanghai Stock Exchange or Shenzhen Stock Exchange. Now, when they come over here, if they become successful bidders and they of course, the board and management would also be, of course, would be theirs. So is it going to happen? Because that's an economy where the biggest volatility in stock market has been seen in the last couple of years. So is it not too risky for a small market, because they are a very big market and we are not a very big market? So the volatility, because people today, even the index goes down by 1% today, 550 points, and people are worried. Although it is slightly more than 1% of the index, which is normal even in developed markets all over the world. Index goes down by 1% and one day and goes up by 1%. So this is should be a concern. And the secondly, my suggestion would be that about the customer rights. Now, I think the CFA has come up with a very nice customer rights statements, and under the leadership of CFA Pakistan, Ashraf Bawa. In my view, I think all financial institutions in Pakistan, the banks, the commercial banks, whoever is dealing with investors' money, I think whenever they open account of a customer, even the brokerage houses, all the 450 or so brokerage houses, when they open an account, and we have already started this practice, that printout should be given to the customer. The customer should know their rights, And secondly, I think they should also be given a very nice measure has been taken by SCCP about Jama Punji, about the safety of the customer's interest. And again, we have started this practice of giving that also to all the customers who open accounts with us. So the customer should know their rights. And unfortunately, in our country, Urdu is a national language. Perhaps many people cannot understand English. Those customers who are not able to understand English, they should be given in Urdu. And those customers which are comfortable with English should be given in English. Both the customer rights issued by CFA and the Jama Punji message issued by SCCP should be given to all customers of all financial institutions, asset management companies, mutual funds, investment banks, and brokerage houses, whoever is dealing with customers' money. So these are some of my suggestions and comments. Thank you.
This has been made part of the CDC's package that it gives to any new account opener. So and we are finding more and more new different ways to reach out to every investor with all this information. Like we had in the morning, we had in this hall a theatre play that was being organized by us in collaboration with the Pakistan Stock Exchange, just to give information that all these activities are happening and they have to take care of their rights on their own, the investors themselves. So we are disseminating this information to more and more investors through various means. Our Jama Punji portal had more than 200,000 hits during last year. And through social media, we have approached to more than 20,000 people who have subscribed to our SMS service 8181. So efforts are ongoing that the message should reach to the masses. And for this, we need the support of the other stakeholders as well, like the mutual fund industry and the brokerage houses as well, to expand their outreach to other cities beyond the major cities like Karachi, Lahore, and Islamabad.
Just to add to that, yes, the SEC is doing a wonderful job there. I think the issue is the conflict that we are not willing to address. If I'll talk about the mutual funds because enough said about the brokers. But to go sell a mutual fund, the salesperson gets a commission. The salesperson acts as if he or she is an advisor to the so-called investor, whereas the commission this person is getting is from the asset management company. So it's a very conflicted role, and as long as we have these conflicts within brokerage, because in terms of brokerage, if it's very low brokerage commission rate, you then want to have the client churn a lot. I'll give you an example of, like Ali talked about, the banks coming into the fold of selling mutual funds. Believe you me, the biggest problem we face as the mutual fund industry is where the banks consumer people who their way of life is कि किसी तरह बना दो और churn करो, and they keep churning the clients' monies. The SEC came in with a regulation that a certain size of money, beyond that you can't charge those front loads, etc. To start splitting those investments. It's conflicted, and unless we address those conflicts, we'll continue with all the education we want. We will not really actually deal with the real issue, which is deal with conflicts.
Firstly, congratulations on finally putting the investors first. There's been a lot of talk of bringing in foreign institutional investors, and in general, the advertising that has been done revolves around the strong returns compared to other emerging markets in the Pakistani market. Now, foreign institutional investors don't just care about making a killing on their investments. They care as much about the post-trade risk management infrastructure, if not more. Now, it's slightly disappointing that on today's panel, there's no representation from either the Clearing Corporation or the CDC. Those are two important elements of the risk management infrastructure. My question is, what exactly is being done at CDC, PSX, and NCCPL to improve risk management practices? Do they have dedicated risk units? Do they employ specialist risk managers? Do they have specialist chief risk officers? That's one question. Coming on to the other question. There was an article in Forbes a few days ago which discussed how the Pakistani market was doing much better than China and India. The benchmark that was used was the Global X MSCI Pakistan ETF. One thing which wasn't mentioned in the article, and I hope people know about this, is you know what this fund size of that ETF is? It's 11 million USD. Now that's not even chump change for institutional investors. Now, the MSCI, according to the MSCI classification, there's just one large cap stock on all of PSX, just one large cap stock. And if you take into account the free float adjustment, that's not large cap anymore. What exactly is being done to enhance the capacity of the market, both in terms of its depth and its breadth? And is there a timeline in mind? Do the regulators, do the frontline regulators, I'm assuming that means the self-regulatory organizations, are thinking about it? Is there a definitive timeline? Are people thinking about hitting the ground running come June 2017, when indices will be index funds will be rebalancing their portfolios? Another thing is a very important concern for foreign institutional investors is systemic risk within a market. Now, is there a system, is there a mechanism for or a council or a coordinator for the CDC, PSX, and NCCPL who cuts across, diagnoses, and then addresses on a regular basis systemic risk issues? I'm not sure if there is one. If there is one, great. But is there one? For example, like in the US, you have the Financial Stability Oversight Council that designates SIFMUs, the systemically important financial market utilities, and then provides oversight over them. The comment that I'd like to make is that it's been said that Warren Buffett describes derivatives as weapons of mass destruction. Almost everyone in the investment world knows this. What people don't know is that Berkshire Hathaway has implemented a left-tail hedging program in which they are short, deeply out of the money, put options on S&P 500. So this guy is himself taking positions to hedge. So yes, derivatives are a double-edged sword, but that doesn't mean that they are all evil. For institutional investors, they have a tremendous amount of utility as hedging instruments.
I'll respond to the extent of systemic risk issue. I think for the risk management, Lupan is there. He may be able to address the question regarding risk management unit at NCCPL, CDC, and Pakistan Stock Exchange. As far as systemic risk issue is concerned, the regulator and the industry both are now on the path to take care of this thing. At SCCP, just like in other jurisdiction, we have the Council of Regulators. The proposal has been initiated with the Ministry of Finance as well as with the State Bank of Pakistan to establish a Council of Regulators. Initial TORs are being developed in this regard. The process was initiated a couple of years back, but this was held back because certain legal and regulatory modifications were required. So far, with the recent amendments in the SCCP Act, SCCP is empowered to take care of systemic risk issues falling within the regulatory ambit of the areas that it's regulating. So to address this systemic risk within its areas, beside working on the national level with the State Bank of Pakistan and Ministry of Finance, we have established a systemic risk wing within the SCCP, which is monitoring the risk issues arising within the areas that we regulate. Certain reporting requirements have been established with the NCCPL, CDC, and PSX, who are reporting their area of concern or the risk areas to SCCP, and monitoring is being done there at the SCCP. Further, at the industry level, a committee of all these market infrastructure institutions have been established. MOU was signed, I think, last December between CDC, NCCPL, and PSX to address, to take care of any issue which can be an emerging risk to the market. And as far as I know, I think a regular monthly meeting of the CEO of the three entities are being held to monitor these activities.
This regulatory function and the commercial function of the exchange has been separated for a long time now. We have the two functions are separated. The chief regulatory officer is sitting here right with us, and the monitoring, as far as the market monitoring is concerned, that is the job of the PSX. As far as I know, that since 91, 92, we have never had a clearinghouse default. So National Clearing Company is also now we have a separate clearing company and separate depository, as we all know. We have never had a clearinghouse default. So I think on the regulatory side and the risk management side, there have been lots of improvement over the past 2 decades. And the rest, if you have any more questions on this issue, you can speak with Mr. Lukman, who is the CEO of the NCCPL. Again, he can throw some light on this. Mr. Nadeem, unfortunately, is just left. Otherwise, he would have probably given better answer to this question.
If I might add to that, we've never had that default because we decided to shut the market. So that was an easy way of not having the default. So I think all of us should be realistic and honest about it. On the derivatives side, yes, if I have the use of derivatives, I would use them, despite the fact that I speak out against them. And just to make a point, I sort of started an equity fund 15 years ago, and wrote into its offering document that I would use put options under certain circumstances if and when they became available. Every other fund that came after ours copy-pasted that clause. Most of them didn't realize they'd put it in there. So most offering documents allow for that. But having said so, I honestly believe that in the broader scheme of things, leverage per se and derivatives are more harmful than good for us. If we are putting an investor first, and I'll repeat, an investor in the long term, an investor taking a view of equity, matching that person's time horizon, then I am not in favor of the leveraged speculative instruments.
Just want to answer your question with regards to risk management and systemic risk in the system. And just to let you know that the actual, we have a system which is grossly over-margined. So from a risk management perspective, it's actually very safe, but very inefficient. And you can get the further details, but for instance, the regulatory approach to this has been that there is a problem with certain intermediation, the quality of the intermediary, and therefore the actual margin held by the exchange, both on the buy and the sell, goes down all the way to the individual level, cannot be netted, there's no cross variance. So, when you look at sophisticated risk management systems, this is a highly inefficient way of managing margining in the system, but therefore very little risk to the clearinghouse per se. I'll go even further to say that in 2008, there would actually not have been a default of the clearinghouse. There would have been a default of certain members of the exchange, and that is why the exchange was shut. Not to protect the clearinghouse, but to protect members. Okay, we had adequate margins in the system. Sorry, in-house?
It wasn't a central counterparty.
No. So
It wasn't.
yeah, no. So the main reason there was no default or could never have been a default is because we exercised something called the hammer price. So based on that you could never actually have a clearinghouse default. But the biggest move we've had is central counterparty, which has come in from May of this year, which I think is a huge progress forward and gives confidence to every investor who buys and sells in the market that the price at which they execute will be the price that will be honored by the clearinghouse. And the clearinghouse is protected not by so much by the clearinghouse fund, which you point out is very small, but by this hugely over-margined position that they hold. So, and that is actually trying to offset a fundamental issue in the market, and I'll go back to that you are trying to solve one problem by creating issues in another problem. The problem, as I said, one is you need to have, let me put it on the table that will make me very unpopular here, is that we have too many intermediaries in the market, number one. Number two, the vast majority of them lack capital, lack systems, lack people. These are the three prerequisites of preventing systemic risk in the market, that your quality of intermediation must have these three things behind it. If you put these three things in the market, I can guarantee you there will be less than 100 intermediaries in this market, maybe less than 50. I don't know. I'm not close enough to the market to be able to say. And that would probably improve the quality of the intermediation. Time and time again, the problem comes from having a lack of those three things. So that's the weak link in the chain. To solve that, what we've tried to do is that all investor shares should be held in the CDC. So our CDC now actually is very novel, that it provides a function of retail central depository function, which is not normally done. Our clearing company also offers a very interesting product, which is clearing for the retail, again, which is never done. Clearing is only ever done for institutional clients. So we are trying to solve this intermediation problem by trying to solve all the other things, and I think it's a step backward for the system overall. So, but the weak link is the quality of the intermediary, not the quality of the exchange, the settlement guarantee fund, the margins in the system. The CDC and NCCPL are brilliantly run institutions, are very sound, both on systems, people, and the capital required to do the function that they have.
I would like to basically, appreciate all the work that SCCP has done since the early 1990s. Today, you have companies putting up balance sheets and financial statements on their websites, and the information is available quite easily. However, obviously, the global markets have moved even further. They've instituted something called XBRL, right, that basically provides information to the investors to do a lot of calculations, comparative analysis, etc., etc. Right now, the way the information is presented on the company's balance sheets are more in terms of scanned documents, right, which are hardly you cannot manipulate the data in terms of trying to figure out your investment strategy. Is overselling its mandate rather than saying that we are providing investor assurance in terms of providing the, to provide information, right, which is more transparent and easily available, because, the investor might feel that the SECP is protecting it and therefore it cannot have a loss of capital, which is obviously not the intention that I would expect. So is it by using terms like investor protection, are we overselling the SECP's mandate to the retail investor?
As far as the information disclosure of Pakistani companies are concerned, I think we are compliant to all international standards. This matter of usage of XLBR was considered by the Commission a couple of years back, but considering that this will increase the cost of doing business for the companies, this was deferred for the time being. Rest, the disclosure requirements are in line with international standards. We were recently been assessed by the ISCO, International Organization of Securities Commission, and all the disclosure requirements are in line with international standards. Currently, we are undergoing World Bank assessment of report on observance of standards and codes for our accounting and auditing systems. And so far, there is no major gap in our disclosure requirements to the international standard. So that will be considered usage of XLPR in due course of time, when I think our companies are in a position to take that additional cost. Because, recently we make it mandatory to even publish the prospectus in Urdu language, considering the use of Urdu language in Pakistan. This is now a practice even before it was made part of the legal system. But gradually there are move to be more transparent and more quick dissemination of information to investors. Coming to your second question, the investor education initiative that SCCP has taken, it all focuses on making investor aware on their rights and responsibilities. And saying this, that SCCP is protecting the right of investors through Jamapunji initiative doesn't mean that they can overlook what they have to do themselves. So we are creating awareness on the financial terms that they are overlooking currently. There are certain instances that we come to know that investors don't even look at the forms that they fill in with the CDC or the broker. And the information what is required for them to be receiving, they are unable to receive because the mobile number, the email address of the broker is written on the form. And most of the investors don't take a copy of the form that they have signed. So these are the basic awareness issues that need to be addressed at this stage.
Make a point. The first point you made, I think it's an excellent idea. And capturing data electronically, it's not a big deal. I don't think it's that costly. Any company that thinks it's worth coming and listing should be able to do it. It's an excellent suggestion, and I would strongly urge the SEC to sort of start that off sooner than later. The second point, yes, I mean, historically, even when NIT, being an equity fund, used to guarantee a redemption price. So we've had this view in Pakistan of making sure that we sell guarantees. You go invest in the national savings certificates in fixed rate instruments, and you have a guaranteed return. You don't suffer market volatility. So we have to do a lot of things to make it market oriented, and people need to realize that there is a risk involved.
We have just small token of appreciation for our speakers. Just request Ashraf Babu, the president of CFA Society Pakistan, come on the stage and do the honors. Ashraf, please. With this, we come to the end of today's session. Thank you all for joining in. Please, can join. Thank you.